Welcome to our latest video, Top 10 Countries with No Income Tax in 2025. In this video, we explore nations that offer the unique advantage of zero personal income tax, providing insights into their economic structures and lifestyle benefits. Whether you're an entrepreneur, investor, or someone seeking financial freedom, these countries present compelling opportunities, from the oil-rich economies of the Middle East to the serene islands of the Caribbean and the Pacific. We'll delve into how these countries sustain their economies without taxing personal income. We'll also discuss the residency and citizenship options available, making it easier for you to consider a move. Stay tuned as we count down the top 10 tax-free countries, highlighting what makes each one unique and why they might be the perfect destination for your next chapter. Don't forget to like, share, and subscribe for more insights into global living and financial optimization. Number 10. Maldives. The Maldives continues to attract global attention in 2025 as a premier destination for those seeking a tax-free lifestyle amidst natural beauty. The nation maintains its policy of not imposing personal income taxes, making it appealing to digital nomads, entrepreneurs, and retirees. The government's 2025 budget projects revenue of MVR 39.8 billion, primarily sourced from tourism and grants, reflecting a strategy to balance fiscal responsibility with sustainable development. Tourism remains the backbone of the Maldivian economy, with projections aiming for 2.4 million tourist arrivals in 2025. However, despite an 18% year-on-year increase in arrivals as of April 2025, the average stay has shortened to 6.9 days, down from 7.8 days in 2024. This shift presents challenges in maximizing tourism revenue, prompting the government to implement strategic developments and marketing efforts to enhance the sector's competitiveness. Living in the Maldives offers a unique blend of affordability and luxury, depending on location. While the average cost of living is approximately $1,399.00 per month, expenses can vary significantly between the capital, Malé, and the outer islands. For instance, renting a one-bedroom apartment in Malé's city center averages MVR 17,644.94 per month, whereas the same outside the city center averages MVR 11,827.79. These factors make the Maldives an attractive option for those seeking a tax-free environment coupled with a desirable lifestyle. Number 9. St. Kitts and Nevis. St. Kitts and Nevis continues to attract global attention in 2025 as a premier destination for those seeking a tax-free lifestyle amidst natural beauty. The nation maintains its policy of not imposing personal income taxes, making it appealing to digital nomads, entrepreneurs, and retirees. The government's 2025 budget projects revenue of MVR 39.8 billion, primarily sourced from tourism and grants, reflecting a strategy to balance fiscal responsibility with sustainable development. Tourism remains the backbone of the Maldivian economy, with projections aiming for 2.4 million tourist arrivals in 2025. However, despite an 18% year-on-year increase in arrivals as of April 2025, the average stay has shortened to 6.9 days, down from 7.8 days in 2024. This shift presents challenges in maximizing tourism revenue, prompting the government to implement strategic developments and marketing efforts to enhance the sector's competitiveness. Living in the Maldives offers a unique blend of affordability and luxury depending on location. While the average cost of living is approximately $1,399.00 per month, expenses can vary significantly between the capital, Malé, and the outer islands. For instance, renting a one-bedroom apartment in Malé's city center averages MVR 17,644.94 per month, whereas the same outside the city center averages MVR 11,827.79. These factors make the Maldives an attractive option for those seeking a tax-free environment coupled with a desirable lifestyle. Number 8. Vanuatu. Vanuatu stands out in 2025 as a premier destination for individuals seeking a tax-free lifestyle in a tropical setting. The nation imposes no personal income tax, capital gains tax, inheritance tax, or capital export tax, making it highly attractive to digital nomads, retirees, and investors. Additionally, companies can benefit from tax exemptions for up to 20 years, further enhancing Vanuatu's appeal as a business-friendly environment. While a 12.5% value-added tax, VAT, applies to goods and services, the overall tax structure remains favorable for both individuals and businesses. Economically, Vanuatu is experiencing modest growth, with the Asian Development Bank projecting a slight increase in GDP for 2025, following a 1.7% growth in 2024. The economy is primarily driven by tourism and agriculture, sectors that are gradually recovering from recent natural disasters, including a significant earthquake in late 2024. Despite these challenges, the government's commitment to fiscal stability and economic reform is evident in its 2025 budget policies. The cost of living in Vanuatu varies depending on location and lifestyle. In Port Vila, the capital, the average monthly expenses for a single person are approximately $1,940.00, which is higher than in many other Pacific nations, but still lower than in major Western cities. Housing costs can be relatively high due to limited real estate availability, especially in urban areas. Overall, Vanuatu offers a unique combination of tax advantages, natural beauty, and a relaxed lifestyle, making it an appealing option for those seeking financial efficiency in a serene environment. By 2012, the Fanon Brent Number 7. Bahrain. Bahrain remains a top choice in 2025 for individuals and businesses seeking a tax-friendly environment. The country continues its long-standing policy of imposing no personal income tax, making it especially attractive to expatriates and foreign investors. Bahrain also does not levy capital gains or wealth taxes on individuals, which significantly boosts its appeal among high-net-worth individuals and remote professionals. The government primarily funds its operations through oil revenues, corporate taxes on oil companies, and a value-added tax, VAT, that stands at 10%. The kingdom's diversified economy adds to its financial stability and quality of life. While oil and gas remain vital, Bahrain has successfully developed strong sectors in finance, logistics, manufacturing, and tourism. Manama, the capital, is recognized as a major financial hub in the Gulf, hosting regional offices for global banks and fintech startups. In recent years, the government has pushed forward its Economic Vision 2030 strategy, which promotes innovation, privatization, and job creation in non-oil sectors, a move that continues to attract international talent and entrepreneurial activity. For residents, Bahrain offers a balanced lifestyle with modern infrastructure and relatively moderate living costs compared to its Gulf neighbors. Monthly expenses for a single person in Manama average around $1,500.00 to $2,000.00 depending on lifestyle choices, while rental prices remain lower than in Dubai or Doha. Healthcare and education are accessible, and the country maintains a reputation for religious tolerance and cultural diversity. Combined with its tax-free status, Bahrain stands out as one of the most livable and financially efficient countries in the Middle East for 2025. Number 6. Bermuda. Bermuda remains a prominent destination in 2025 for individuals seeking a tax-friendly environment. The country does not impose personal income tax, capital gains tax, or corporate income tax, making it attractive to expatriates and international businesses. Instead, the government generates revenue through payroll taxes, customs duties, and other indirect taxes. For instance, the payroll tax, which applies to employers and employees, varies depending on income brackets and employer size. Economically, Bermuda is projected to experience growth between 3.5% and 4% in 2025, driven by international business, tourism, and public infrastructure investments. The government's 2025/26 budget anticipates a $43,300,000 0-cent surplus, the largest in over 2 decades, reflecting disciplined financial management and strategic investments in healthcare, infrastructure, and cost-of-living relief. However, challenges persist, including a declining population and an aging workforce, which may impact the labor market and social services. Living in Bermuda offers a high standard of living, albeit at a significant cost. As of January 2025, the average monthly rent for a one-bedroom apartment in the city center is approximately $4,576.50, while outside the city center, it's around $2,980.02. Despite these costs, the absence of direct taxes and the island's quality of life continue to attract professionals and retirees seeking a financially efficient and picturesque locale. Number 5. Monaco. Monaco continues to be a premier destination in 2025 for individuals seeking a tax-efficient lifestyle. The Principality has upheld its policy of not imposing personal income tax on residents since 1869, with the exception of French nationals. Due to a bilateral agreement with France, this absence of personal income tax extends to earnings from salaries, investments, and capital gains, making Monaco particularly attractive to high-net-worth individuals and entrepreneurs. Additionally, Monaco does not levy wealth or property taxes, although rental properties are subject to taxation. Economically, Monaco has demonstrated robust growth. In 2024, the Principality reported a budget surplus of nearly €200 million, 0 cents, with the Constitutional Reserve Fund reaching €7,300 million, 0 cents, equivalent to approximately 3.5 years of public spending. Key sectors such as scientific and technical services, construction, hospitality, and digital industries have experienced notable expansion. However, residing in Monaco comes with a high cost of living. As of 2025, the average monthly cost of living in Monaco City is approximately $9,083.00, placing it among the most expensive cities globally. Housing costs are particularly steep. For instance, a $1 million 0 cents investment secures only about 19 square meters, 205 square feet, of prime residential property, underscoring the limited space and high demand in the Principality. Despite these expenses, Monaco's combination of tax advantages, economic stability, and luxurious lifestyle continues to attract individuals seeking financial efficiency in an exclusive setting. Number 4. United Arab Emirates. The United Arab Emirates, UAE, continues to be a top destination in 2025 for individuals seeking a tax-efficient lifestyle. The UAE does not impose personal income tax on residents, meaning salaries, wages, investment income, and capital gains from personal assets are generally not taxed. However, a 9% corporate tax applies to business profits exceeding AED 375,000, and a 5% value-added tax, VAT, is levied on most goods and services. These policies contribute to the UAE's appeal among expatriates and investors. Economically, the UAE is experiencing robust growth. The Central Bank of the UAE projects a 4.7% GDP increase in 2025, with further acceleration to 5.7% in 2026. This growth is driven by diversification efforts beyond the oil sector, focusing on areas like finance, tourism, and technology. Dubai, for instance, has seen significant expansion in its financial services sector, attracting global investment firms and professionals. And finally, fintech firms introduce new technologies that may help prevent financial crimes and professional. Living in the UAE offers a high standard of living, though costs can be substantial. In cities like Dubai and Abu Dhabi, a single person's monthly expenses average around AED 4,000, excluding rent, while a family of 4 may spend approximately AED 14,000 per month. Despite these expenses, the absence of personal income tax and the quality of infrastructure continue to make the UAE an attractive option for many. Number 3. The Bahamas. The Bahamas remains a premier destination in 2025 for individuals seeking a tax-efficient lifestyle. The country does not impose personal income tax, capital gains tax, inheritance tax, or wealth tax, making it particularly attractive to high-net-worth individuals and retirees. Instead, the government generates revenue through indirect taxes such as value-added tax, VAT, property taxes, stamp duties, and import duties. These favorable tax policies have solidified the Bahamas' reputation as a tax haven, attracting both individuals and corporations aiming to minimize their tax liabilities. Economically, the Bahamas is experiencing moderate growth in 2025. The International Monetary Fund, IMF, projects a real GDP growth rate of 1.8% for the year, with inflation expected to remain low at 0.9%. The economy continues to rely heavily on tourism, particularly cruise ship arrivals, and related investment projects. Efforts to diversify the economy and strengthen resilience to climate hazards, such as enhancing local food production, are ongoing to reduce economic risks and promote sustainable growth. Living in the Bahamas offers a high standard of living, though it comes with a relatively high cost. As of mid-2025, the average monthly rent for a one-bedroom apartment in the city center is approximately $107.06, while outside the city center, it's around $955.54. Despite these costs, the absence of direct taxes and the country's natural beauty continue to attract expatriates and retirees seeking a financially efficient and picturesque locale. Number 2. Qatar, Qatra, stands out in 2025 as a tax-friendly destination, particularly appealing to expatriates and investors. The country maintains a tax system that does not impose personal income tax, capital gains tax, inheritance tax, or property tax. Instead, revenue is generated through corporate income tax, which is levied at a flat rate of 10% on profits derived from business activities within Qatar. This tax structure contributes to Qatar's reputation as a favorable environment for professionals and businesses seeking to minimize tax liabilities. Economically, Qatar is experiencing steady growth. The International Monetary Fund, IMF, projects a real GDP growth rate of 2.4% for 2025, with inflation expected to remain low at 1.2%. The National Planning Council reported a 3.7% increase in GDP for the first quarter of 2025 compared to the same period in 2024, indicating strong economic performance. This growth is supported by diversification efforts beyond the oil sector, focusing on areas such as education, infrastructure, and tourism. Living in Qatar offers a high standard of living, though costs can be significant. As of mid-2025, the average monthly cost of living for a single person is approximately QAR 3,338.71, excluding rent, while a family of 4 may spend around QAR 8,458.68 per month. Despite these expenses, the absence of personal income tax and the country's modern infrastructure continue to make Qatar an attractive option for expatriates and professionals seeking a financially efficient lifestyle. Number 1. Saudi Arabia. Saudi Arabia stands out as a tax-friendly destination in 2025, particularly appealing to expatriates and investors. The kingdom does not impose personal income tax on salaries or wages, making it an attractive option for professionals seeking to maximize their earnings. However, non-resident individuals earning income from sources within Saudi Arabia may be subject to withholding tax, depending on the nature of their income and applicable tax treaties. Economically, Saudi Arabia is experiencing robust growth. The International Monetary Fund, IMF, has raised its 2025 GDP growth forecast to 5.9%, up from a previous estimate of 4.2%, driven by strong domestic demand and government-led projects. This growth is supported by the government's Vision 2030 initiative, which aims to diversify the economy away from oil dependency by investing in sectors such as tourism, entertainment, and infrastructure. Living in Saudi Arabia offers a high standard of living at a relatively low cost. As of 2025, the estimated monthly expenses for a single person are approximately $817.00, while a family of four may spend around $2,914.00, excluding rent. Housing costs vary by city. For instance, a one-bedroom apartment in Riyadh's city center averages SAR 2,042 per month, while outside the city center, it drops to SAR 1,428. Utilities, groceries, and transportation are also affordable, contributing to the kingdom's appeal as a destination for expatriates and retirees seeking a financially efficient lifestyle. Conclusion. Thanks for watching. As we've seen, the top 10 countries with no income tax in 2025 offer incredible opportunities for financial freedom. Whether you're an entrepreneur, retiree, or digital nomad. While each destination has its own pros and cons, the common thread is the ability to keep more of your hard-earned money while enjoying diverse cultures, climates, and amenities. Whether you prioritize economic stability, quality of life, or business opportunities, these no-hymned tax countries stand out as attractive choices for those looking to maximize wealth and minimize tax burdens. If you're considering a move or investment abroad, be sure to research each country's residency requirements and lifestyle factors to find the best fit for your goals. Don't forget to like, subscribe, and hit the notification bell for more insights on finance, travel, and global living. See you in the next video.